We got a fresh CPI print this morning and the markets are responding favorably. Not too sure if that's the right approach to be taking right now, but hey, we're just two guys who like talking about the markets. Nothing we say on this show is financial advice. Welcome back to Money Never Sleeps, day number 2 here on this show. Before we get going, please hit that like button, subscribe to our channel. And like I said, nothing we say is financial advice. Do your own research. We're just going to give you our impressions on the market. Maybe we're right. I think that we're headed in the right direction, at least the way that we're viewing it. But Kevin, we saw inflation come in, up 0.4% month over month. That was in line with projections. Up 6% year over year. That was also in line with the projections. What were some of your takeaways with the data and how the markets are responding?
Markets responding as I would anticipate markets to respond to data that comes in at expectations or below expectations. This isn't a terrible print. Obviously, it could have been a lot worse. It could have been a lot hotter. But again, I'm very hesitant to believe a lot of the data that's coming out, especially surrounding everything that's happened with the 3 banks. We've seen over the past 3 months, there's been tons of revisions to CPI later on. So this being at expectations, that's a pretty easy swing to say that maybe this came in a little hotter than, we initially expected a month, 2 months from now. So I'm not necessarily super bullish at this point. I think this is a lot of overreaction. If anything, I think maybe we were pricing in a lot of this stuff beforehand, and we saw that into the short squeeze into where we are right now. It's definitely shot up a lot higher than I expected. More so crypto than traditional markets. Traditional markets are, responding, I think, maybe a little bit positively to the CPI data, but not necessarily crypto markets. I think there is some type of divergence between those two, and we're seeing a ton of optimism. But that's not my belief at all. I think that we've hit some key levels, and I think that we're going to potentially see this. This is going to have to play out again. We've said it for the longest. I don't think it's going to be something in the market that drops it based on data. A lot of it's going to be just unexpected. You're not going to see this coming. But for right now, the data is what the data is. We just have to roll with it.
Yeah, let's look a little bit deeper into that CPI because I think a lot of people just look at the headline numbers and don't actually dig into what it's telling us. So core CPI was actually up 0.5% month over month. They were projecting 0.4. Previous month was 0.4. So that number is not good. That's telling us that a lot of this stuff is sticky. The biggest contributor was shelter, which made up 70% of the increase, up 0.8% month over month and 8.1% year over year. And that is a big contributor. With core, they strip out food and energy. And so shelter makes up a huge portion of that. On the food side, we saw the food at home index is up 10.2% year over year. Like that's not good. Like nothing about that is good. That's a crazy high number. Food away from home, 8.4% year over year increase. That's still pretty insane. Energy index fell 0.6% in February. That was led by natural gas. So, the people are reacting to this headline number to the belief that the Fed, this is enough to get the Fed to pause for at least one meeting. CME Group is still at about a 76% probability of a 25 basis point hike. And I don't feel like this number is all that great. Maybe they pause it, for one meeting just to let things calm down, as far as banking goes. Maybe they hold off on their quantitative tightening for a little bit just so that, they don't have to sell more bonds and the banks have to deal with the stress of that. But nothing about this number today, is changing my sentiment. If anything, this is making me want to hunker down even more, use this spike up as an opportunity to exit. We're looking at on the crypto side, ETH just hit a 6-month high this morning. Bitcoin, highest price we've seen it at, when it hit just under 26K, it spiked up, to 26.4, came right back down. But if we look at it, the last time it hit that high of a number was when we had a massive crash, June 13th of last year. So it's been, 9 months since Bitcoin was at this high of a level, and nothing else in the macro is telling me that this is warranted. Maybe I'm not seeing something, but to me, and I had some people pushing back today, no, it's just the beginning of this run up, blah, blah, blah. It's you can dollar cost average out as well, right? You don't have to just dollar cost average in. You can sell some of your position at this point if you think that we might pull back a bit and continue to enjoy the ride up. So I think that taking the all or nothing approach is not the right way to go right now. It could lead to outsized returns, sure, But I think for most people, taking a little bit of a trim off the top, 20 to 30%, that's what I'm doing, is not the worst idea in the world, because I think that once the initial excitement of this wears off, like, I think we may get Powell being incredibly hawkish at the next meeting, like talking about what they did for banking, but also like really putting his foot down as far as the fact that like the Fed, this battle against inflation is nowhere close to being over.
Oh yeah, 100%. It's also just a reminder of how good you and me are as co-hosts together, because you brought up some things that I was thinking of and we haven't talked about it. So yeah, Bitcoin at that high since June of last year. We'll get into a Bitcoin dominance, but we'll see some parallels between that and where we are currently. But yeah, I completely agree. Powell has his mindset on bringing down inflation. I think he's made a ton of mistakes this entire time. Obviously, February was an absolute huge mistake. But at the end of the day, everyone is worried about these banks collapsing. But we kind of knew that this would happen if their target rate was 2% and they were not bringing inflation down at a rate in which they saw fit. We had PCE data come back and it spiked. We had to expect that the rates are going to continue to grow. I think 25 basis points would be the smart thing to do here, even though I think 50 should have been the February one. A lot of these banks obviously knew that there was going to be a run at some point. They're trading these treasury bonds. They probably should have offloaded a lot of them earlier on and then probably swapped for, higher returns, maybe shorter treasury bills. But at the end of the day, this is not necessarily the healthiest thing for the market. If we continue to lie, continue to pump money into the market when we have inflation, that's how we get hyperinflation. That's how we'll get something similar to the 1980s, where, Paul Volcker, I said this last time, but had to raise rates to like close to 20%. That's not ideal. We don't want to see that. That's going to hurt everyone as opposed to hurting a select few people. We're still waiting on unemployment to, rise. There has to be some type of economic reality in which things actually work out the way that they should and the way that it's supposed to play out. And we're just not seeing any of that. We're seeing everyone, we're seeing the government and the Fed pretty much protect everybody. And that's not good, because we need to just make sure we get inflation over with. And once inflation's over with, the market can absolutely recover. But to hold up this narrative that we're continuing to, that we're on this economic recovery, that we're bullish because this is the beginning of a huge move to the upside, it's just absolute insanity. And I know it just, reality has not hit most people. And I think that people are just absolutely blinded by what's coming. And it's just, it's absolutely disappointing. It's just, you and me talk about it all the time. I'm too flustered to talk right now, but it's just insane how everyone is.
People want the bear market to be over, and you can want for that to be the case as much as possible, but that doesn't mean it's going to come true. And at the same time, all of the talking heads and even people like myself and Kevin, we've never lived through anything like this. When you have, you had a pandemic that led to the money printers printing more money than has ever been seen. And then you add on top of that, let's get a war going, which, in and of itself is an absolute disaster, and you hate to see it. So no one who's talking about the markets right now has ever lived through this. I think that needs to be like made crystal clear, no matter how smart people want to portray themselves. Like, you have to do what is best for you. And that may not be like the sexiest thing. And that may mean being, bearish when others are euphoric. Like I was talking about it on Twitter today. There are a lot of signs to me that the market is overly heated. Like, I'm seeing people, I have some rules of thumb. If you start screenshotting like your account value or what the charts are doing, it's probably a good idea to take some off the top. If you're getting people who don't normally talk about crypto asking you about what's going on with crypto and if they should buy crypto, that's usually a sign to take some off the top. So you got to do the best with the information you have right now. You have to learn from previous mistakes, or if you're brand new to it, some of these mistakes are going to happen, but be careful, like I said, who you're taking advice from. And maybe Kevin and I aren't the smartest people in the world. I think we've made that pretty clear, but we pay attention to a lot of this stuff. And I think that we're on the right track with kind of this, pseudo hedged position. Like, I have my long-term, I know you're all in cash. I have my long-term position that I'm comfortable with for the next, 10 years plus. So I can enjoy the run-ups, but at the same time, I've taken some off the table. I have some cash waiting because I do very strongly believe that we're going to see another big pullback here in the coming weeks or months.
Yeah, I couldn't agree more. Huge one when you start screenshotting your account portfolio. I remember doing that back in October of
Yeah.
2021. And what happened after that? A few months later, we're at 47K. And then a few months after that, we were at 17K in June. So always a good,
Yep.
always a good indicator for people talking about crypto. And the one thing I do want to bring up too, because we're talking about people on Twitter and all these other YouTube platforms just being absolute influencers. I don't care about the Bitcoin halving. I'm going to just be honest with you. Like at the end of the day, crypto assets, financial, these are all tools just to build wealth. But when I look at the Bitcoin halving, and obviously that's going to limit the circulating supply, and they're printing less of it now. They have to do more work to mint the remaining Bitcoin. It's sure it was bullish for the first few years, but it's bullish until it's not. And like you said, we're in a place where Bitcoin has never been in a recession. It's never seen, a war to this level. We've never seen, in 2020, we saw more money printed in the entire history of the United States printed within 1 year. So it's a lot of stuff that Bitcoin's never experienced before. It's a young asset.
Yep.
It's new, but things always work out until they don't. And just to believe something blindly and say it's predictable, absolute insanity. Anything could change at any given point. Nothing in this world is guaranteed.
Yeah, for sure. Crypto has seen its own bear markets, over the last decade plus, but it's never seen a global bear market,
Right.
A potential global recession. So I think you need to take the previous rules of thumb with a little bit of a grain of salt and be willing to, cut ties to some of those notions when you're getting, information to the contrary. So I know you are like giddy to talk about Bitcoin dominance. So let's go ahead and jump into that.
Wonderful. Let me just pull it up. Yeah, Bitcoin dominance. It's something a lot of people don't care about. Obviously, there's a few people on Twitter that really like it, like Benjamin Cohen. I respect his opinion a lot. He talks about Bitcoin dominance coming back, but I just saw something on the charts over the past few days. I'm like, this is rising pretty fast. So let me just pull this up. There we go. So this is Bitcoin dominance. We're looking at the total market cap against other altcoins, and this is the past few days. We were down here at about 42%. So 42% Bitcoin has dominance over the rest of the market. And we just started shooting up. We got above this 50 moving average on the daily. We shot up to here yesterday at 44%. And today we saw a high of 45.8, 46% pretty much. Let me see. What is that? The height? Yeah, almost 46%, which is pretty freaking amazing considering how bad it's been, since this bear markets began. Like, let's go out to the weekly. Might be easier to see. Bitcoin dominance at one point was all the way up here at 73%, and that was in March of 2021. But we're shooting up a ton, and obviously we're in a bear market. So as this is increasing, and I have no indication or no indicator that we're in a bull market or we're heading into a bull market. I've seen more bearish signs than bullish. Again, we talk about this all the time. But the last time we were this high was May of 2022. And I remember where I was in May of 2022. Terra Luna just collapsed. Terra Luna had just collapsed. You hear that in the background?
I did. The trains are coming.
Trains are coming. You can't stop what's coming. That's straight out of No Country for Old Men. But anyways, going forward, we were in May 2023. I was in Las Vegas and Terra Luna collapsed. I remember that day perfectly because I tried to swing trade the bottom of Terra Luna and obviously didn't work out. A few hours later, if I would have bought in, I would have been a rich man. However, it didn't work out. But we saw that collapse and we saw Bitcoin just pull the market down like crazy. And then obviously we bottomed somewhere around here. What's this? That's September 2022. But we just saw the dominance that Bitcoin had. As the price came down, everything followed with it. And the top we saw, 48.53%, and that was in June. That was June 6th of 2022. So as it started coming down, obviously we know what happened a week later. It was 3 arrows. It was like June 16th or something like that. And we just saw, 27K to like 17K, so like super fast. Pretty much everyone thought that was the bottom. However, when we look at where we are today, we're rising and we're pretty overbought. We're getting close to the overbought territory on the weekly. If we look at the daily is overbought now. It's in that territory. Still has a good amount of room to the upside. I wouldn't be surprised if we get a double top or if we get close to it and we just make like a lower high. But at the end of the day, we're at the same level we were back in June when that collapse happened. And we're currently pretty close to where the Bitcoin dominance was back in June. And we're overbought on the weekly and the daily for Bitcoin dominance. I don't know if this is just pairing up perfectly to the point where we're going to see a huge collapse and Bitcoin is going to drag the whole market down. Like we'll see altcoins and everything just bleed another 50%, because a lot of altcoins right now are somewhere around that range of where they were in June, but some of them are lower. You know what I mean? So there could be a potential just drop to some of these targets that we've been talking about. When will it play out? I have no idea. Obviously, we saw a short squeeze that's a lot higher than I expected based off of, the US dollar going down a little bit. We saw tons of, people pricing in the fact that there might not be a rate hike. So it's a really weird short squeeze that we're in right now. But when I look at the Bitcoin dominance, I think that this thing is just going to absolutely tear. I'm going to watch this over the next few days to see what it does. Obviously, we'll update it if anything crazy happens, but that's just something to keep an eye on. I think this is probably the most important chart that you should be watching when it comes to price action and volatility in the crypto market. Everything else, I think right now is a little bit of noise, manipulation, and just short squeezes. I could pull up the funding rates right now and you're going to see that everything is positive. And it's just, why would you be longing when the rates are positive? That's what everyone else is doing. That's what the market sentiment is. If I take a look at what longs and shorts are, their positions over the past 24 hours, I could tell you that we are not too bad, 50-50, 50-49, 51-49 for long to short. So maybe this does play out a few more days, or maybe it plays out, to the end of this week. But point is, I think that this narrative is going to fall, especially with how positive funding is, and then how close we are to hitting that June height of the Bitcoin dominance. So something extremely interesting to notice, I think a lot of people aren't talking about.
Yeah, Bitcoin dominance is something I want to learn more about. I want you to continue to talk about it, help educate myself and the viewers on it, because this is a metric than a chart that I know look at consistently. So want to dig deeper into that. And same thing with the funding rates. Like I think the more tools that we have at our disposal that can better help our decision making, as opposed to just looking at what the Moon Boys are saying, or maybe looking at the reverse Kramer index or whatever index they made that is up significantly over the rest of the market this year. The better we're going to be. So we can get into that on future episodes. Is there anything else that you're seeing? We looked at the charts yesterday. With us doing the show Monday through Friday, I think our best bet is going to be looking at the daily charts or the 4 hourly, or if something else like really jumps out to you on the weekly or monthly, we can look at that too. But what are you seeing on the daily charts for the DXY, for Bitcoin, for ETH, for any other tokens that you've been monitoring?
Yeah, absolutely. So for the daily, we saw tons of drop yesterday for the DXY. DXY is one obviously I keep an eye on every day. It's super important, as we see. I think this is assisted a lot of the Bitcoin pump yesterday. We saw tons of people exiting the dollar, whether they were, just going long because people were anticipating that there was going to be no rate hike. If they were just making swaps on Forex, just because there's maybe a potential trade there with other currencies. We saw the dollar pulled back, and we had been talking about the dollar pulling back at some point, probably like right around here. It was just overbought at that point on the weekly, and the daily was overbought even at this range. We just pumped here. What was that? March 7th. So a few days back last week, but right now we're seeing that we're below the support level, which is that 103.69. This is one that we talk about always. It was ranging in this area for a few days. I think that we need to see some pump to the upside. And again, when I mean pump, it's just something that gets us above the support level. I think this level might hold, this 103.69, especially if, we haven't seen too much volatility from it today too. Obviously it came up here to 104 around there, but it could have been a lot worse. So I think the dollar is holding pretty strong at this level. We're going to see if it can hold above it. We're going to be oversold completely today on the daily. So hopefully we do see some price movement to the upside. And again, the DXY is trading purely on news and maybe a little bit on technicals. A lot of people swapping for Forex. That's going to change, based on whatever news comes out. Rate hikes, that's going to change the narrative of the direction of where the dollar goes. It is overbought on the weekly, but on the daily, there is room to the upside. So I am anticipating a little bit of a bounce. But if something crazy happens with risk assets where, people are just selling nonstop, obviously the dollar is going to grow strength against those risk assets because the demand's not going to be there. And there's going to be tons of supply for those, such as Bitcoin, even NASDAQ, Dow, stuff like that. So something to keep an eye on. Dollar right now, trying to find some support around there. I'd like to see if it holds or if we close to oversold by tonight. That's all I have for the dollar. Looking at some other stuff right now. Let's see. Bitcoin, let's just pull it up because it's been going crazy. I know I tweeted this I tweeted this last night, and again, it's a really weird time because when I look at these, like this pole coming down on the weekly, and we're climbing up, we're fighting. It's a bear flag. It usually breaks to the downside. However, this one broke to the upside, right? And now we're trading in what is still another bear flag. We're making higher highs and higher lows. And we broke above this channel again, and we broke above the 50 and the 200 EMA. I don't know what level of manipulation this is. We saw, what was the height of this? This was 26,533. So we saw a pretty good level it shot up into. A few weeks ago, I was talking about potential move to 28K. I'll pull up this chart. It was 28,809. And we did hit into the supply zone right up here, and we got rejected. We're still in it technically, but we got rejected from the higher end of this. Tells me that a lot of people are selling in this area. I don't know if that's institutions. Maybe that's Binance himself or CZ, just getting rid of everything. But there's tons of, we're seeing a little bit of selling in that area. Let me just pull up maybe a smaller chart, like not the daily, but maybe let's try like the hourly. Yeah, we're just trading sideways in here, and we can see that the stochastic RSI is pretty overbought, and it's coming to the downside. And if we also look on the hourly, the volumes are coming down too. So we might see us pull out of this. I think there is a good amount of selling in this area. Let's see if there's anything less, like a lower time frame. Yeah, we're just trading sideways right now in this. It's kind of a weird time, but we're just finding support on the 50 moving average. Again, I think that we have to look at the daily right now. It's going to be completely overbought. And then just question yourselves, does this look normal in a bear market? Does this huge 3-day green candle, 4-day green candle look, normal in a bear market? I don't think it does. I think these usually tend to be desperation rallies, trying to grab liquidity as much as they can. We know who's buying. We also know who's entering. A lot of people are still on the sidelines. I think yesterday's stock market as well, they were selling the rallies. I anticipate them to sell the rallies again maybe tomorrow into this week. I just don't think there's a lot of people who are actually going long or seeing institutional money going long here, which tells me that a lot of people might get trapped. So we hit that supply zone. Technically, this could be the point where we start to reverse. Maybe it goes up a little bit more in that zone. But for the most part, I think we are going to be hitting our head right here. I'm not telling you to go long or go short, but when I look at the funding rates, I'm seeing positive, which tells me that the price action is probably going to be negative. So that's just my thoughts on the daily, looking at Bitcoin.
Question real quick.
Yeah.
So like a lot of people who are big into crypto, I'm of the belief that at some point crypto will decouple from the traditional stock, financial markets,
Sure.
just because it is, there are going to be more people who want to control their money. It's going to be viewed as a safe haven. So if this sort of situation, and I'm just trying to play devil's advocate on the bear case here, but if a situation like this doesn't scare people into self-custodying their money and keeping more in Bitcoin, and therefore leading to this run up in Bitcoin, and maybe, I'm not going to say it's going to keep, we're not going to get a green candle like that every day, but what's to say that it's not going to keep these higher prices if people want to keep their money in the markets? Like, that's just me trying to look at it. I want to poke holes in our sentiment around the market right now, right? Because if we get too locked into being bears, that doesn't do us any good. So
no, for
do
sure.
you see a situation where crypto becomes that safe haven? And if not a situation like this, what do you think it would be?
Yes and no. I think right now a lot of it is institutional that drives the price up. Obviously, I don't think retail brought the price to Bitcoin to 69K last year or 2 years ago. I think that a lot of this is trading like traditional markets at some point, but it's maybe a little bit more technical considering how volatile it is, just because how low cap some of these projects are. But I think, again, this is a game like the traditional finance markets. Maybe people do self-custody, and maybe we don't. What I think we would see is something similar to maybe the Dow or the NASDAQ or S&P, where sure, we do get some retracement back to pretty good lows. However, we don't go below current bull and bear market lows, if that makes sense, like the highs. Yeah. I think, obviously the price and the value will continue to grow over time. However, right now, this is 100% a game. I think that you cannot get to some of these higher levels and some of this adoption unless you have institutional players alongside retail in this market. And it's just, people see gains, they're obviously going to enter. People see red, they're not going to enter until it's too late. People like to see those green candles. I think that's going to bring people in, and maybe self-custody is the answer. But at the end of the day, I think a lot of people who maybe enter Bitcoin or Ethereum in these positions, they aren't necessarily people that like to see their money go down. And this money can go down pretty fast, and maybe you can hold on to it. HODL, I don't like the HODL. I think that, like I said, this is a tool for me. This is 100% to build wealth, to protect your wealth the entire time. I think there's tons of opportunities, and I think it is a good store of value if you can afford to take a bit of a loss in the short term, maybe a few years or so. But when you see people who are just like, okay, I'm afraid of the banks, I'm going to move my money into this right now, that's desperation, and that's when people tend to lose. So just a thought, that would be my estimation on why maybe Bitcoin doesn't go up in green candles for the rest of eternity. But I do think over time, gradually, as all things take time that are worth being a part of, we will see Bitcoin rise as institutions and retail, continue to grow the market cap.
Okay. Just something I like to think about. Like we gotta look on it. I feel like we should probably do at least one segment a week where we look at like our current feelings on the market and try to poke holes in it and see like if we can change that sentiment, because that's where you're gonna get an edge right here. Like it's
For sure.
easy to get caught up in the bearish side, it's easy to get caught up in the bullish side. Let's try to zig when others are zagging. So okay, that was everything for Bitcoin. Anything else you want to touch on with ETH or any other altcoins, or is that a good indicator of where we're at right now?
I think we're pretty good. I think Ethereum hit a high of 1784. Is that what it hit today? Yeah,
Yeah.
1784. Pretty good. Again, I don't buy any of this stuff, and I'm not just being a mega bear. I just see funding rates, and I see a lot of other data. And I'll be honest, these volumes are pretty low. They're decreasing as we get deeper into this price push up. Again, as lower volumes come in, that just means volatility is most likely going to come in. It can drag the market in one way or the other. I still don't think we're out of liquidation season, and I think you're going to see a ton of it. I'd be so worried about Bitcoin dominance right now because Ethereum essentially is losing dominance against Bitcoin as that increases, and all other altcoins obviously are. So I think that they'll probably react a little bit more violently than maybe Bitcoin does. And that's something that we've been talking about since October this year. I thought that Bitcoin had another 30% drop from where it currently was, and altcoins it was 40 to 60% just because that dominance level, and it tends to be like that. And we saw it in June when Bitcoin dropped. We saw tons of altcoins just go straight down. Great buying opportunity, but again, we have to question when this bear market will end. I don't think it's going to end for some time until maybe after the pause of rates. It really depends on what the Fed's doing, but also what the technicals are saying. So it's really going to take some time. I'm not really sure exactly how deep this can go, how long this narrative can play out that we're in a bull market. But when I look at Ethereum and all these other coins, yes, absolutely, I think that they're going to be coming down. It's just a matter of when. It's just when we least expect it, when is this going to actually be the rug be pulled out from under us? Because right now, this is probably the most liquidity we've seen in the market in a pretty good amount of time. Like this is since the high since June. So that's always something to keep in mind.
For sure. Okay. I think that's going to wrap up on the crypto side. I'm just so interested to see what the hell the Fed does next week.
Yeah.
Like, what is Jerome Powell thinking? What are the other, members of the Fed thinking right now? Because it's just such a weird spot. Like, I almost feel like they're going to be waiting until early next week. Normally it feels like they already know what they're going to do heading into the meeting, just because we have a very clear picture from the data. But this time you obviously throw the meltdown of SVB into the equation, and they're just probably scratching their heads right now, and maybe some other areas too. Not sure what the hell they need to be doing, but it's going to be interesting, man. Powell's presser next Wednesday, I think, is going to be must watch, and I'm excited to kind of see what he says there and his tone and how hawkish he sounds.
Yeah, it's at this point sometimes when the market's still going to go down, but obviously the market's reacting way differently than we would anticipate. Granted, month over month CPI came in higher than 0.4% or something like that. It came in higher, and then we have 3 banks that are about to collapse, and I don't know. There's just tons of bearish news. Sometimes the best thing to do is just step away. You know where it's going, and just like take a good breath, go for a run, do something. Because if you just look at these numbers all day, and looking at these numbers, past 24 hours is giving me a headache because nothing makes sense. You're not going to like being in crypto much for much longer. So obviously these numbers do mean a lot, but if you know the direction and you have conviction and you can afford to, give it some time, you don't have to make the gains right now. Maybe it's just good to take a little bit of a break. That's what I'm doing. I'm going to go for a run later. Not too worried about the price push to the upside. I think that we still have much more exciting price movement to the downside in the coming months. So that's all I got.
Listen, I got a dentist appointment this afternoon. If my dentist brings up crypto, I'm selling everything. Okay, that's going to be my top signal right there. If the dentist starts talking about crypto, then it is time to GTFO. So that's going to wrap it up for today. We'll be back tomorrow. We got a fresh batch of data coming out tomorrow morning. We got producer price index. We got retail sales. We got, it's just fast and furious heading into next week's FOMC. So we'll talk about that at some point this week. I want to get into some of the international markets as well. I think that is, something we need to keep our eye on because, as crypto becomes bigger and bigger, especially over in Asia, I think the market's going to continue to increase over there. We need to keep track of everything that's going on around the world. So at some point this week, we'll talk about the Asian markets as well. Maybe Thursday, we'll touch on that one. But we'll be back tomorrow. Another episode. We're going to go live tomorrow at what time, Kevin?
Is it 2 p.m. Central Standard Time? So
2
3
p.m.
p.m.
Central
Eastern.
Standard Time. 3 p.m. Eastern, an hour before the markets close. We'll have some data to talk about, like I said. So that's going to do it for today. If you're still here, we appreciate you. 2 days into this, we're loving it. Please hit that like button, subscribe to our channel. And if you're enjoying our content so far, share it out. That would mean a ton to us. Drop a comment. All these things help the algorithm. We greatly appreciate it, everybody. We'll be back tomorrow. Have an awesome day. We'll see you next time.
Take care, everyone.